first, before we dive into um, what Rayanne does, I want to give you a little bit about alternative payments, the company I work for. We at the core, easiest, simplest definition are a payment portal for MSPs. Our number one goal is to create a payment portal that's easy for you and your clients to use. That means we want your clients to be comfortable signing in, viewing current and past invoices, making payments, updating stored payment, ACH, and credit card information, and setting up autopay. For you, the MSP, we want to help you run your business more efficiently. That means, if you're currently collecting checks or manually running ACH or credit cards, um, what's going to happen is we're going to create the payment in the accounting system. We're going to mark the invoice paid in the accounting system in the PSA. When we send the deposit to the MSP's bank account, we create a deposit in the accounting system. We associate all the payments that are included with that deposit. And then if you've chosen to absorb any credit card fees, we'll include those fees in the deposit as well, making bank reconciliation a breeze. So if any of you are interested in learning more about that, there will be an opportunity for you to let us know later on in the session. Rayanne is the president of ABC Solutions out of Florida. And Rayanne, I met you, gosh, has it been 7 or 8 years now?
I bet it's longer.
Really? I think it was Autotask 2017, maybe.
Wow, really? Okay.
Uh, so yeah, it's been a while. But yeah, we met back at Autotask Live. It was at the Diplomat, I want to say. It was an amazing resort in my impression. I mean, I don't go to too many resorts, so I thought it was fantastic. And
Was that the one in, no, that was in Arizona,
I
right?
think this is the Hollywood, Miami one.
Yes.
Yeah, so that's where we went. And Rayanne is really multi-talented. Not only is her company fantastic for accounting services for your MSP, but they also have Autotask consultants that can help you.
And
So,
ConnectWise.
oh,
And
that's right. Yeah. Yeah. So I think you do Autotask, right? Do you do the others as well?
um, I have a team.
Mm,
I have a team that manages all of our, we call it the invoicing department, invoicing and agreement management. And
mm.
so they manage all of our clients, monthly invoicing, project invoicing, recurring, whatever. So yeah, I'm not I know enough to get by in ConnectWise, but I promise nobody wants me to configure their ConnectWise. Other tasks I could do it with my eyes closed, but
Right.
I've got some great people on my team who can do the others.
Well, that's fantastic. So, yeah, if you are in need of whether it's accounting services or maybe it's help configuring your PSA, and not just for the accounting stuff, but they'll help you configure all sorts of stuff in your PSA. But I believe, don't you also support the, I can't think of what it's called right now off the top of my head, the Service Leadership Index chart of accounts? So
We
you
work, yeah, we work with a number of clients that are in various peer groups, the evolve groups that follow the service leadership. So, we help them get their chart of accounts set up and restructure everything, map all of the information from ConnectWise, PSA, um, to, to the accounting system. And, but there's others out there that have their own, peer groups and chart of accounts. So, we can work with any of those.
wonderful. Well, very good. So, hey, today, I'm sorry, I keep looking. Let me turn my teleprompter on. I know I'm real fancy, right? Let me turn my teleprompter on. That way I'm looking at the camera instead of off camera. There we go. There we go. So today we are going to have a fun conversation I know Rayanne put together a little slide deck, but that's just to help facilitate the conversation. It's not because we want to bore you with death by PowerPoint. Um, so today Rayanne is going to talk to us about a few different scenarios in which she's helped MSPs, and she's going to show us like what she's done for these MSPs and how that helped them. So I'm actually going to pass it over to you, Rayanne, because you're going to explain this much better than me.
Okay. Um, and I'm, I will go ahead and share my screen.
No problem.
And this is my first day with Zoom. No, I'm teasing, but am I sharing the
Essential financial calculations. Looks great.
Perfect. Okay, great. So hi everybody. Thank you for joining. This is me. I'm Rayanne, and ABC Solutions. And thank you very much, Steve, for that fabulous introduction. We work with MSPs and IT firms all around North America. With We help with the accounting, the day-to-day bookkeeping, month-end sales taxes, multi-state, jurisdictional sales taxes, payroll, HR, invoicing, procurement, like you name it. Whatever is ailing your MSP, ADC has a department for it. So please feel free to reach out if there's anything that we can help. Today I thought that it would be I was telling Steve off camera and in a conversation earlier through email that as I was building this slide deck, and I was like, I've said all of these things 10 times before. I was putting up all of the same things, and I was boring myself. And I thought, no, I have got to do something better. So as I started thinking more and more about it, I thought, every MSP that I talk to, every one of you, you're in a different place in your business, and you may have different goals, and you may not know how to reach those goals, right? So, so I put together 4 real life stories that where an MSP came to us with a specific goal that they wanted to achieve, and they were stuck, and they didn't know how to get there. There were certain things that they were really good at, and there were certain things that they needed some help with. So please join in on the conversation, ask questions throughout. And Steve, by all means, I really want this to be a conversation for the 2 of us.
Absolutely.
So the first company came to me, and they were struggling to get to the next level, and they had topped out. They were overstaffed, and they were scattered all over the place, and they really wanted to grow. They had an idea. Their idea was, we've got some really smart people on staff, and we've got, some really good developers and really good at, security, and we really want to focus on this, but, we can't seem to, to get this revenue in and really utilize this team. What are we going to do? And so when I walked in, I saw the P&L, and in year what, like they had product sales, professional services, managed services. We had very little detail, and the rest of the P&L was, was much of the same. They were still being taxed as the sole proprietor, so we went ahead and moved them to an S corporation, saved them a ton of money in income taxes. And so by taking some of this information, taking some of this day-to-day stuff away from them, the person that was doing the bookkeeping at the time, super loyal person that's been with them, but that person's expertise was more in procurement, purchasing, and the actual number details was not the person's forte. Not only that, they couldn't help them read it or understand anything. So in comes ABC. We go in, we redesign their auto task, and we redesign their chart of accounts so that we can see where they're making money, where they're not making money. I wasn't very good. Like, I'm not the person that's going to help you take your security expertise to market, right? Like, that's not what we do. We're here to help you, understand where your profit numbers are, where you need to increase revenue, increase, pricing or whatever. So we found that their projects were the most profitable thing, and projects often come with recurring services at the end. So we started focusing on, larger and more profitable projects, and the larger the projects, then the next large project would come, and the next large project would come. So as you can see, they had year-over-year revenue growth because a couple of other things we did. We found that staff augmentation was very not profitable. So we started to taper that off until we got rid of it altogether. The staff augmentation is you're selling an hour and you're paying somebody for an hour. It's very profit. So we got rid of that. We found that some of the subscriptions that were being resold were also equally not profitable. So what we did was we converted them to direct pay and started collecting commissions on those things. Anyway, so and then we were able to really focus our efforts on the areas that were going to make this company money. And so that's what we did. And as I said, you can see the year-over-year growth of 27%, 23%, 19, 22. And then in the final year, when they sold, they had a flat year that year of 11%. And this company was able to sell for $7.5 million. And that was, that was one of the really, most eye-opening M&A projects we did. And we helped them through the entire thing. We helped them through the due diligence, and we made sure that all of the records were, were clean. And anytime the buyer needed something, we had it. Like, it was already there.
Mhm. So I guess what I'm curious, what do you think was the biggest contributor to the sale price?
The biggest contributor to the sale price, and we still talk about that to this day, is we think that it was the expertise of the techs and the engineers that were on staff. There was a lot of investment made to ensure that the engineers were fully certified and super experienced. They were, Microsoft keynote speakers. They really had a lot of background and education in the security sector, and they went out and they promoted that. And so when the big boys came down the road, they were looking for a specific skill set, and they found that this company had it. They had what they were looking for. It was a secret sauce that the big boy company that came along, they didn't have, and they knew that they wanted.
Mhm.
The one thing, oddly enough, even numbers never played a part in this transaction,
Really?
really. And nobody was more surprised about that than me.
It bet. Because that's what everyone talks about when it's, time to sell. Oh, what's your EBITDA multiplier and all that stuff, right? So that's really cool that it didn't even really seem to factor into it. I'm sure it did, but all of the other numbers were good enough that they didn't have to use the EBITDA as a crutch almost?
I would be willing to bet that they used that number or at least looked at it as they were coming up with an offer price. But
Mhm.
I'm here to tell you that um, n- no amount of multiple was going to get this company to that number, right? Like, well, because in the years just before the sale, the company had spent a lot of money and effort, in building their team's expertise and, in education, um, and promoting that, like they were building their infrastructure to get everything ready to go. Uh, and had this company not come in year 6 to buy them, they likely could have doubled their revenue in the following year because they were fully ready to go to market. So, but they were not very profitable in the 2 years. They weren't profitable at all in the 2 years before this sale. So that's why I say that EBITDA never played a
Hmm. That's really impressive. Hey guys, if you have any questions, feel free to pop them into the chat. Feel free to use the Q&A portion of Zoom. We want this to be as interactive as you want it to be. So, yeah, ask away. Rayanne here is a wealth of knowledge, and she wants to help you.
I do, but and in the meantime, I'm going to move on to our next story.
Sounds good.
All right. This next story was really very interesting. This company had just out of the blue called me one day and they said, we've heard about you from this place or that place, or we found you on Reddit. It's amazing how many people hear about me on Reddit. But they picked up the phone. They said, we don't have any customers. We're just starting our business, but we have a plan and we want to sell our business in about 5 years. And I thought, well, that's really ambitious. Like you've got no customers, you're out in the middle of nowhere. And yet you want to sell your business and, in a few years. Okay. All right. So they said, here's what we need from you. We need you to keep our books squeaky clean. We can do the selling, we can provide the services, but when we want to focus on our exit and we want to start today, and we want to focus on our exit and we never want to take our eyes off the goal. So and we need you to give us monthly accurate reports, tell us where we're doing well, tell us what we need to cut out. And um, and so we went to work. I set up their accounting system. And if anybody has not yet seen the chart of accounts template that I built for MSPs, I think you should be able to find that on my website in the resources page. Our website is being redone, so I don't know what stage it's at. But um, so I built this template, and it's a very simple template, and I'm going to walk you through that in a little bit. But we've aligned their various revenues streams and their various cost streams so that we can watch their margins at every step of the way. All right. So what you're seeing here is a very collapsed version of this company. Their first year in business, they were able to eke out $236,000, and they ended up with a net loss of $6,000 that year. Then they
Mhm.
started to focus on hardware as a service. Hardware as a service was a really, really big thing for them. They would buy firewalls and routers, and they owned those appliances, and then they managed those appliances. They sold them every month, right? So every month they're just getting like, and after the first year, they're making their money back. So they really focused on hardware as a service. And so they were able to double their revenue in year 2, and then half again in year 3. So by year 3, they went from $0 to 866,000 in total revenue. By year 4, they broke the $1 million number. Now, I wish I could say that I had something to do with their sales ability and their, go-to-market strategy. But that's not, that's a different story. So, but our focus here was to pay attention, track the hardware as a service, and I built a whole process on how to do that. We tracked it by the customer. We knew exactly which appliances were at which customer, and at what point, did they start making, profits on this. So and then sometimes we would take them out of service. We would put new ones in service. Like we had a whole process built around hardware as a service. And so when the buyers came along and they asked for the breakdown of, all of the numbers that were in the hardware as a service, because it was sitting right on their balance sheet, as installed assets, hardware as a service. And they were like, where's the detail behind this? And, 5 minutes later, here's our sheet. Here's our worksheet. We had it all broken out by customer. And, they didn't ask again. Like, because that's the other thing, like that we do is, when we are planning and we're helping our clients get ready and plan for their exit and their sale, we're stocking the data room with everything that those buyers are going to ask for. And so they're all going to be ready. Anyway, while this company went off and sold their services like the Dickens, we stayed in the background and we helped them manage their agreements and their contracts and their invoicing and their accounting. And in 5 years and 9 months, they sold the company for $3.5 million. And so, and you can see again, like if you look at that net operating income, that EBITDA number of 300,000. So in order to, what is that? Seven times EBITDA. EBITDA was even the deciding factor, and I'm sure it was one of them, right? Like I don't want to discount the importance of making sure that your operating income is profitable. Like we all need to make profits, but you can see there the year-over-year growth from beginning to end. And I'll tell you, Steve, when they called me that it was 2019, it was, and they're like, this is our plan, and this is what we're going to do. And I was like, okay.
Hey, as long as they pay the bill, right?
And every year, because I also prepared their income taxes and I would review it with them. And every quarter we would go through the financials. It was like, guys, you're doing it. Like you're going to, and they're like, oh yeah, we never had a doubt. So, moral of that story, see what you want and like really see what you want and then go get it. Apparently it's possible.
So I have a couple questions. One, how on earth did these people come up with this crazy sounding idea to start up a company solely for the purpose of selling it?
The two gentlemen have been in IT for a really long time. They both worked at different companies. And one of the shareholders was really, really close to retirement age, and he wanted to go out with a bang. And he was like, I'm not ready to retire yet, but in 5 years I'm gonna be. And this is the number that I want. And so And that's a really great question. Like, I don't know where you are in your life, but what is your number? And
Mhm.
not age, but what's your number? What's that number that's gonna say, I I got this. I don't think I need to work anymore. Like, well,
That's a good point. Like, I am very much a reactive person by nature. I'm a very disorganized person, and I like to plan, but I like to plan like, here's what my day looks like today. I don't think about, what number do I need to be able to retire? You know what and how do I come up with that number? And uh where do I keep it? Like there's so much that I don't think about. I've got the 401k and the IRA, and I'm throwing money into it, but I haven't really sat down and thought about, like, all right, if I reach I'm just going to pull a number out. If I reach 2 million by 55, is that enough? I have no idea. I'm just going to keep squirreling away money and hope for the best. I don't know. Like,
right? But if you have 2 million when you're 55, then you can at least make that decision. I'm working because I want to work. Right?
mhm.
Uh, I'm not. I'm, I'm not working for some invisible goal. And if you don't have a goal, how do you know when you hit it?
Yeah, it's a good point.
So, I say go for the $2 million by the time you're age 55, and then make the decision from there. You can say, hey, uh, I set out a goal to make $2 million in my retirement fund by the time I'm 55. And look, I'm here now. What if I win at 4? What if I win 6? So
Right. Yeah.
do anything.
And you got to figure out, all right, so how much do I need to pay myself a year to enjoy my life? And then you have to figure out that divided by or multiplied by however many years you think you'll live. Maybe add 10 more just in case. I don't know how that works, right?
Right?
Um, we do have a question from Antonella. I'm going to get to that in just a second. I found your chart of accounts. I added a link to your chart of accounts in the resources section of this event. If you guys can figure out how to get to the resources, let me know.
How to get there, but it's there.
If you can't figure it out, I asked Chat GPT because I forgot that I made that my default search engine. I asked it, Rayanne Buchianico, ABC Solutions, chart of accounts for MSPs, and it was right there. So
Oh,
um it definitely is searchable if for some reason you cannot find it in the resource section here.
and I'm happy to mail it to anybody. And I update it regularly. I'm not sure if the one that's on the website is the updated, but the most important thing to remember about that is it's a template. It's
Mhm.
designed to give you, make you think about what are my revenue streams, and what are the costs that align with those revenue streams so that you can see product revenue versus product cost, this service revenue versus this service cost. Um, don't go crazy. I'm going to talk about the chart of accounts briefly in the next couple of slides.
Excellent. So Antonella asks, how are you measuring the relation between salaries and revenue? And do you find that useful?
Actually, I do find that very useful. I call that the labor efficiency rate. So a couple of calculations, and thank you for that question because I love it. A couple of calculations that you're going to what is take the number, take the total dollars of revenue and divide it by the number of human beings in the organization and find out what your revenue per uh, person is.
Hmm.
And, um, and that number should be for an IT firm no less than about 225,000, right? So if you've got, um, let's say you've got $1 million in revenue, then that means you probably shouldn't have more than 4 or 5 people on staff. Um, Otherwise, you may not be making the appropriate profit. Now, there are some other conversations about are those direct labor like technicians, or is that everybody? And I venture to say that it's probably should be everybody, because every person in the organization should contribute in some fashion to the revenue that's generated of the company. And that includes your administrative staff. So that administrative staff should be supporting your service delivery, and taking taking the repetitive and time consuming tasks away from them, so that your service department can be providing service and not doing a lot of paperwork, right?
Hmm.
Record your steps, send it to admin, type up a procedure, get it into IT Glue or whatever your documentation is. Like, there's a lot of things, there's a lot of um, use for administrative staff that probably goes unutilized in many MSPs.
Hmm. So I never thought about having the administrative staff doing some of that other stuff, but that makes sense. Um, what I think you answered her question. Um,
Okay.
I'll organize my thoughts and circle back to that. I'll let you dive back in.
Okay. I've got two more stories, and then actual steps that you can take in your company, regardless of whichever one of these stories resonates. And I hope at least one of them does. I feel like, we're all in a different place in life. And my goal here is to, bring these, situations that probably a lot of you have encountered at one time or another. All right. So, this third company, and Steve, I feel like I've talked to you about this company in another conversation.
Okay.
This company, near and dear to my heart. They came to me um, probably back in 2019, and they were moving from one PSA to another PSA, and they asked for my help. So I spent a few, flew out there, spent a few days at their location, and I set up, auto task, set up the workflow rules, set up the contract, set up everything. I also converted their accounting system from Peachtree to QuickBooks all in one shot. And I spent that time teaching their office manager how to do everything. So fast forward 2 years, I get a phone call from one of the shareholders that he was the only person in the office because the entire company was in the hospital with COVID.
Oh wow.
The office manager didn't come out. And the owner was terrified. I guess I have no idea what, what the office manager did, how they did it. I don't, there's maybe some notes. Um, and so, I was like, it's okay. I taught her everything that she knew. So, I feel like, and we're going to stumble, but we got you. And, and naturally we sent, flowers to everybody, including, that. Anyway, it was a terrible, terrible situation.
Yeah.
Um, and so that gave me the opportunity to reconnect and sit down and find out what their goals were. And, and so when one was getting ready, like, I'm just working here until I can retire in a few years. I'm hoping I can do that in a few years. And the other one's like, I really want to build this business. But we need somebody that can do, sales and things like that. I'm great at technology, but, sales is probably not my thing. Anyway, so, as you can tell from their revenue, if I get my little laser pointer, here's my laser pointer, you can tell by the revenue that they never really grew very much, in that time.
Yeah.
Because that really wasn't their focus. What their focus was cash. How much money can we make and how quickly can we make it? And so this is uh this is where they focused. And we made sure that their gross profit margins, their margins stayed right exactly where they needed them to stay. Their EBITDA margins stayed exactly where they needed them to stay. All bills were paid not just on time but early. There were um, zero personal expenses on the books, no exceptions. Like they wanted to, make this company as profitable as possible, and they cut out, like, there were really strict purchasing procedures. Like, everything had to go through either a purchase order or some sort of approval process, and everything was paid on time. No interest on any of the credit cards. If there was ever an interest charge, I was hearing about it, right? Like, why did I get charged a finance charge this month? I want my bills paid on time. Yeah, and so, um, and then they took their uh, their surplus cash and they
Mhm.
started investing them in high yield savings. And so,
Mm.
you know, their uh, their income, their income was for this kind of revenue to make this kind of net profit and operating, like, you can see their other income, year over year, like, like they were investing their money, and everything they did was on purpose. It was very purposeful spending, very purposeful savings and investments, because they had a goal, and their goal was cash.
That's
So,
really great.
right? Um, and and this company recently sold. Um, as you can see, it's actually very, very recent. This company recently sold. Sale price was $1.5 million. Why? Probably because they had flat sales for 4 years in a row, like no
Right.
huge growth, but they were very profitable. And I have to share this. I must have heard this 5 times during the due diligence process from the buyers. We've been doing this for 25 years. I have never seen a cleaner set of books. Right.
Mm.
It just made the process so much easier for everybody, the buyers, the sellers. And when you have good data, then, like, when you have good, clean data, then, that adds a certain level of value to your business. Like, they don't have to slog through a bunch of personal expenses. What is this trip to Disney World? And why is it in, meals, or office expenses, right? Like, so, um, remove the personal expenses from your books entirely. Write yourself a check and put it to shareholder distribution and make those payments out of some personal. Did you get your thought together yet, Steve?
Well, I have new thoughts now. Um, all right. So zero personal expenses on the books, no exceptions. How how common is having personal expenses on the books?
There.
Really? So I'll be honest. I would have some personal expenses on the books, but nothing as bold as, well, I didn't think it was as bold as going to Disney and calling that a business trip, right? I would have, like, the cell phone.
Well,
That's my
those are actually a legitimate business expense and 100% deductible.
Yeah. Or like, my car. Uh, so, I would get creative with some of the things that I was putting on there, but for the most part, like I didn't have anything that was like super crazy. Being an IT guy, being a guy who I like gadgets, anytime I wanted to get myself a new monitor or an updated Mac or whatever, that was all a company expense. Now, if I wanted to get a new Xbox, that was not a company expense. Um, but there might have been like some smart home stuff that I would pick up and call it a company expense. However, uh, like I might have had like an Amazon Alexa, a Google Home, and an Apple HomePod because I want to know how these things work because I've got clients who have these things in their office and I want to be able to talk to them intelligently about how all these things work. I couldn't stand Amazon Alexa or Google Home. I'm an Apple guy, so the other two meant nothing to me, but I would still tinker with them. Um,
Right.
so I guess when I think of like personal expenses on the books, like I feel like I traveled in a gray area, and sometimes I actually felt like, am I okay? Am I doing this right? Um, But man, I never thought about, like, going to Disney World. Man, I wish I could go back in time and do things different.
So and I've heard a number of people say this to me over the years. I've had previous, accountants and CPAs tell me, you know, never pay for a meal again with your personal money. Every meal is a business expense.
Mhm.
Well, um, I don't know. That might have been true back in the 1990s, but it's certainly not true today. There are a lot of really strict rules surrounding, what is a deductible business meal. And so, so I've worked with CEOs of MSPs and that have taken that advice from other accountants to heart. 3 meals per day on the books of the company. And like, um, I've seen it as high as $50,000 a year.
Can you
$50,000.
imagine? That's almost a salary.
It's like $6,000 a month or 4,000. I want to say it was 4,000, $5,000 a month in food purchases on like, what are you eating?
Well, so, like, I would do some meals, but, like, if I'm on site at a client, I would do it, and I think it was like a 50% deduction because 'cause I'm not buying the client a meal, I'm just getting myself McDonald's. Like and, now, uh, I may have a DoorDash obsession, um, but, I'm not running that MSP now, and I'm not going to clients, so, it all comes out of my personal bank account. Um,
I've
if
actually instituted like um for some people that just can't give up those personal expenses. All right, I'll tell you what we'll do. Let's create a reimbursement, like an owner's reimbursement account down in the other expenses section of your P&L. So this way it doesn't interfere with your EBITDA numbers, right? You're
Mhm.
gonna write them all, if I'm not doing your tax returns, I have no say in that, right? So but if I am doing your tax returns, we're going to have a different conversation. But go ahead and measure it, like, so that you can see how much money you're spending, personal money that you are spending, that from the company's bank account, so that you can really see the difference as to what the company is making and what you're taking out. It's not, it's your money, it's your company, it's your money. You can do whatever you want with it. Um,
Right.
so, I'm not here to judge. I'm not here, none of that is going on. Uh, but you hired me. You want to know how much money your company is worth or how much money the company is making. You want to hit certain goals. That's how we're going to do it. I'm going to push that. Like, let's get them out of the way. And then put them back in time for your tax return. I don't care. That's not my role.
And you know what else is really nice about having it split up like that? When you go to sell, w- as crazy as this sounds, it's actually an advantage because you can say, "Hey, look, I may not run the books the same way you run the books, but here's all the BS that I buy for myself that all of these expenses are going to go away when I'm gone, when it's not my company anymore. I mean, I'll still work for you. You know how that works when you get acquired. Sometimes you stick around for a number of years. But when it's not my company anymore, I'm going to run the books the way you want the books run, and these are all expenses that are going to have to come out of my own pocket at that point. And
Right.
that's going to improve your EBITDA multiplier because as far as the purchaser is concerned, they're actually going to see more profit because they're taking 60,000 a year out of freaking meals and entertainment that they won't be spending anymore.
All right. I know we're running short on time, and I really want to get to this last one because it's my favorites.
Let's do it.
All right. Hang on. There we go. Now, this company came to us because they were really, really struggling with cash flow, and profits. And so, as many people often do, the interest expense is buried in their operating expenses. And so they couldn't figure out, why they weren't making any money. All right, well, let's separate the interest out. And so once we did that, I could see that their net operating income was about $9,500. And they had every dime of their operating income plus an additional $3,000 went to their creditors. Like, and so, Steve, I want to say you and I had this conversation another time where one of the largest or the single most telling financial calculation is the ratio between the interest you pay to your creditors versus your net operating income. So it's called EBITDA for a reason, earnings before um,
Interest.
taxes, depreciation, and amortization. Get interest out of your operating income and get it below the line and start to measure it. Because once you start to see how much money you're paying your creditors as a percentage of your net income, you're going to start looking at interest with a whole new light.
Wow.
So they had, in year one, they came to us with bank accounts that had $45,000, and they had credit card debt of $127,000 and short-term loans, read On Deck and other predatory lenders like that, right? Like those are nothing more than payday loans for businesses. So they had total debt of $138,000. They had total cash of $45,000. The current ratio was 1 to 3. All right. So then we put into place an aggressive debt repayment plan. And so we implemented
I see it really worked on year 2.
It starts to get there. Right. Like, oh yeah, not so much. But by year 3, we're really making some traction.
And then they like fell off the wagon again in year 5.
And they do. Right. So, and you can see it right down here. They started to really pay closer attention to how much they were paying. What we did was like you were saying, we reduced spending to provide cash. We started paying off the credit cards. We started with the low balances first. And then once that card was paid off, that became the card to use. And that was always paid in full every month. And then we would work on the next low balance, and then the next one, and then the next one. So spending may not have slowed for things, but at least you're not paying 25% interest on your clients' hardware purchases, right? So you have to pay those credit card balances off every month. Otherwise, you're not charging enough for your hardware if you put client hardware purchases on a credit card. If you're carrying a revolving balance, the minute you spend a dime, you're being charged interest on that dime if you don't pay off your balance every month, right? So keep that in mind. When you're, what card am I going to use to buy this laptop for this client? I'm not paying interest on this card. Maybe I use this one and pay it off at the end of the month. Collect payments in advance for all hardware, and make sure that you pay off your balances every month. This client's focus was to improve income. And so we did that by aggressively paying down debt, getting them almost to zero in year 4, and then it starts to creep up in year 5, because it's very easy to fall off that wagon, right? Like all you have to do is miss one payment and boom, you're back up to 30% interest. So pay your bills on time, pay your balances in full, and get off of this credit card interest cycle. Anyway, by year 6, this was the year that they sold. But if you also see, if you start paying attention to their net operating income, it really starts to climb. It went from nothing to something to better to much better, and in this final year, they were doing a lot of the negotiations back and forth in the sale. So there was probably a few months where they just lost sight.
Yeah.
Still, there are times interest earned. And what is times interest earned? That's the ratio I was telling you about. You take, you take your net operating income and divide it by your interest expense, and how many times do you have and I was only working on the credit card interest. We all are going to be paying the SBA for years and years to come. I just simply removed that from the equation.
Why are we paying the SBA?
Oh, for those of us that had idle loans during COVID.
Oh, that's right. Yeah, I did not get one of those. But didn't they have another one, a PPP loan
Yeah,
from your
the
bank?
PPP loans were for the most part forgiven by most companies. So yeah, so that was free money. The idle loan is a 30% loan at 3.75% interest or something like that. And a lot of MSPs took advantage of that. Now, before we run low on time, I want to just talk about some steps that you can take in order to get you from where you are today to whatever that goal is that you've set yourself. And please set some goals for yourself in your business so that you can start to achieve them. The first thing that you want to do is organize your accounting structure. Because your products and your services, they have different margins. And so you're going to want to set margin goals for each of your services. Align your revenue accounts and your direct costs so that you can easily measure, and then place your non-operational expenses to other expenses, right? Your interest, your income taxes, depreciation, and amortization. And often I have a conversation about whether or not bad debt belongs in other expenses. Anything that is not operational. Now, moving bad debt to other expenses is not GAAP, right? So that's not generally accepted accounting principles because matching rules. But, if you're writing off a 3-year-old debt, chances are you're not going back 3 years to, match that up. So get it out of your operating expenses and know your targets. So here's a quick picture of what your revenue and cost of goods sold accounts might look like, right? You've got your product sales with your hardware and software and your cloud resale. You've got your recurring revenue. often I'll pick up cloud resale and I'll stick it into recurring revenue because guess what? It recurs every month. So, so that's a conversation to have with yourself. Do you view your cloud resale as a product or as a recurring revenue or a recurring service? Separate out your T&M, your project, your support, your projects, that sort of thing. Separate out your labor costs so that Antonella, like you'll be able to really calculate your labor dollars against revenue volume. All right. And then a couple of other things. Determine your focal point. Like what's your primary goal? Do you want more cash in your business? Do you want do you want a larger bottom line? How about a profitable exit? Or, an expertise? Do you really want to become, is your goal to become the expert in fill in the blank, right? Sit back for a minute, close your eyes, talk to your leadership team. What defines success? Like how do you define success? And so then, once you understand what success means to you, then you can start to, put together your targets. They should be specific, measurable, achievable, relevant, and know by when you want to reach them. And then as you go, make sure that you manage your progress and do it regularly. Like don't just build it, and then leave it sit like I do to my poor vegetable garden out there. Like it needs love, it needs attention, and it's begging you to give it to them. So, and that is all that I have for today.
Man, I gotta say, I really enjoyed that, Rayanne. Rayanne's email address is up on the screen, Rayanne at abcsolutionsfl4florida.com. So if you have any questions, feel free to email her directly. I really appreciate you coming out. I'm sure everyone else here really appreciates you coming out. We're definitely going to have another conversation in the future together. For those of you who just love coming to all of these office hour sessions, a couple things. One, the next one is in 2 weeks, and we're going to have Craig Fulton from Evergreen Service Group, I want to say is the technical name of the company. They are I think they're technically a PE firm or they're an MSP roll-up firm. We're going to talk about P&L. So that's going to be a fun conversation from the perspective of somebody who is working at a huge MSP. And Craig also used to work at ConnectWise, so he knows a thing or two. And then two, we're going to be ramping up office hours here real soon. So I know I've been hinting at a community for a little while. So if you are interested in learning more about the community, feel free to reach out to me. My email is steve.t@alternativepayments.io. We will soon be having office hour sessions every week. Some of them will be more like round table discussions. Some of them will be presentations like what we had today. So we're going to be ramping this up even further. Don't feel like you have to attend every one of them. I get it. You have a business to run. But I'm really excited for what we are going to continue doing here at Alternative Payments. So with that said, I would like to thank you again, Rayanne, for coming on and working with us today.
You're
Thank
very
you,
welcome, and thank you for inviting me.
absolutely. And thank you to everyone who attended. And I hope you all have a wonderful rest of your day. Take care, everybody.
Bye.